Right, well, good morning, class. Look, we've been through this many times, haven't we? When I say good morning, class, your response is good morning, sir. Good morning, class.
Good morning, sir.
Thank you very much. So this morning, what we're going to be looking at are prefixes, okay? So what is a prefix? A prefix is a part word that is added to another word to change the meaning of that word. And prefixes originated in the original Latin language. So I'm going to give you, class, an example of a prefix. We're going to look at the prefix re or re. And what happens is, class, when you put these two little letters in front of another word, it changes the meaning. And the prefix re has the sense of going back to the beginning. Are you listening to me there? Good. Don't slouch. It has the sense of going back to the beginning and starting something again. It has the sense of repeating something. So here's some examples, okay? So read. Obviously, we've put re in front of the word read, and it means to read again. Rewrite is to write again. Replay is to play again. Revisit is to visit again, rebuild is to build again, and to retry is to try again. Now, class, just to explain, here, I'm going to give you a real-life example. Out there in this real world in which we live, there are mortgage advisors. And these mortgage advisors, unsurprisingly, do mortgages. Fine. But what they also do, they do remortgages. What does that mean? It means they are doing the mortgage again. The prefix has been added to the word mortgage. They're doing the mortgage again. Now, interestingly, these mortgage advisors that are out there, they also protect those mortgages, which is very good. The question, though, is, do they reprotect those mortgages? Do they go back to the beginning? Do they repeat the process again? Do they review those protection policies that they had sold? And the answer, unfortunately, I believe, class, is that many do not do this crucial part. And I'm telling you now, if I had some mortgage advisors in this room, I'd give them 6 of the best if they did not reprotect at the remortgage stage. Well, I can't do that, can I? Because we live in the 21st century. But what I could do is ask them to write some lines out. I must reprotect, I must reprotect, I must reprotect. That is the end of this particular lesson. I'm now going to take the register. Okay, we're going to start off with Adams. Is Adams? No, we're not going to do the register. That's enough of me dressed up like an idiot. And you might think, well, why on earth are we talking about this? We're talking about reprotecting because, ladies and gents, that is what we should be doing. And that's what this little session is about. And what I'm going to show you is why we should be reprotecting and how you should be reprotecting. Is that fair enough? I mean, do you want to look at this? Because if not, I'll get on the train and go back to the Cotswolds. What do you think? Do you want to look at this? Yes. Thank you. Perfect. Now, here's some interesting figures. In this year of 2021, there has been, according to a number of sources, does my hair look all right? I've just realized I've had a cap on. It might look a bit messed up. 700,000 fixed-rate mortgages came to an end or are coming to an end during 2021. That is a total of £242 billion worth of mortgages that have ended or will end during this year. Now, I'm not brilliant at maths, but even I work out that that is 20 billion a month. But here's an interesting thing. In the month of October that's just gone by, there was 44 billion alone in just October. Interesting. And in fact, in January, just coming up, there's going to be another 40 billion of REMOs and PTs coming to an end on fixed rate deals. Now that says to me, this is a massive growing market and opportunity. And at Mortgage Advice Bureau, we are seeing, and we saw in October, the percentage of remos versus purchase go up by about 10%. And that bearing in mind we're going to do 120,000 mortgages this year at least, you shift remos up by 10%, that's a lot of extra remos, is it not? So I'm presuming, do you all agree with this, that this is happening? Are you seeing more remos? Now the problem is, that what generally happens is with purchases, we're pretty good at protecting purchases. But we're not so good at protection on remortgages. Now, you might be different in this room and say, no, we bat about the same. Whatever we protect on purchase, we're writing a similar amount of protection at the remortgage stage. But I don't tend to see that. And the figures that I've looked at industry-wide tell me that that isn't the case. We're writing a fraction of protection at the remo stage. Would you agree with this? Brilliant. Kev does. Brilliant. Now, what we do at MAB, we produce a whole bunch of dashboards and stats. Now, I know you're not in Mortgage Advice Bureau, all right, and you've got your own businesses. I'm showing you this to say this is the start of unlocking this situation. Now, this is just an example of a dashboard that we produced that shows mortgages and shows protection. And what we started doing about 2 years ago was tracking every single mortgage to see whether that individual mortgage was protected or whether it wasn't. And what that enabled us to do was to give science suddenly against purchase, remo, buy-to-let, because those are the three things that we look at. So I'm not going to go through this dashboard. I want to show you this. I've got firm A on the left, I've got firm B on the right. Both of these, they're different scale firms, right? The firm on the left has got a lot more advisors than the firm on the right, okay? But these are their figures over the whole of 2020, all right? So these are last year's figures. Now, the reason I picked these two firms is that they're both really good at purchase. They're protecting at about 65%. So 65% of all purchases are being protected, and that's true penetration rate, yeah? But look at the difference with them on remos. So these are the figures just on remortgages. Firm A has done 1,050 remos, 237 protection sales against those remos. They're running at 22.5%. This firm here, different scale, it's a smaller firm, but 236 remos, 128 protection sales, they're running at 55% near as damn it. Now that's a big country mile difference, isn't it? And what I'm going to do is show you how to get the 54% and not the 24%. Is that okay? Good, right. They're 100% more, aren't they? They're writing twice as much protection, which is great. Now, when we've calculated this, we've looked at average case size on purchase versus average case size on remo. And overall, there's a 30% difference. So if you add up all of your remos and all of the protection in relation to those remos and add up and your proc fees and everything else, and you do the same with purchase, there's roughly a 30% difference if your penetration rate on remo is running that much lower. Now, you scale that up against 120,000 mortgages in a year, this is a huge amount of cash that we're losing, isn't it? It really, truly is. Now, what I want you to do, grab your phone. I just want one question. You're going to answer a question. So get your phone out. Please, 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 get your phone out. And we're going to go, what you're going to do is on your phone, you're going to go to menti.com. So just type in on your phone, Menti, that's MENTI.com. And when you've gone on your phone and typed in menti.com, it will then say, please enter a code. And put in the code 50063777. Do you see these hearts coming up now? These are real people in the room who are playing this game. Right, keep doing it. Go on to menti.com, put in that code. Look, there's loads of you now coming. There's loads and loads and loads of hearts. These are all people that are going to play the game. It's one simple question that I've got that you're going to answer, and we're going to see the results live on the screen. Okay, so let's move on to the next screen here, and we will see what the question is. What is the main barrier? This is on your phone, by the way. What is the main barrier to writing more protection at remortgage? Is it that the advisor's not got enough time? Is it that the advisor's not got enough income from it? Is it that the customer's not interested? Is it that the customer's already protected? Now, there might be other ones that you want to talk about, but those are the 4 that have come out when I've spoke to firms. So keep putting in your answers. Let's see what we get. Okay, lots of results coming through. This is cool, isn't it? It's live. It's all happening now. You're influencing the screen. You've never done that before, have you? This is so exciting. So look, well, I think it is. So we've got 3 who are saying customer's not interested, but clearly out in front is the customer's already protected, and there's another fairly good chunk over there with advisors saying that there isn't enough time. Now, that's quite interesting, isn't it? So we need to deal with this. The customer's already protected. So in other words, me as an advisor, I did the I did the whole job at the beginning, and therefore there's really nothing left for me to do. That's what we're saying. That's why I'm not writing as much protection at remo stage. And the other one down there, of course, is the advisor hasn't got enough time. Well, let's flick back to the screen, to the PowerPoint, and let's deal with some of these things. So let's just have a think about something. So let's deal with the time bit to start with, and then let's deal with what is the actual opportunity out there for us to reprotect, all right? Now, I think a lot of it in terms of time is all about efficiency, productivity. It's freeing up some time, and what we've done is had a look to see how do we speed things up. And what we found is one of the best ways of doing this is how you position. That's what this slide's all about. It's positioning. If you've got a bad position, it's not going to work. If you position things really well with the customer up front, it makes a huge difference to the outcome. And actually, in itself, frees up time. Now, what we've done at MAB is that when a remortgage appointment is made, because that's what happens, isn't it? On a remo, you make an appointment. Customer doesn't phone you and say, hey, do you realize my product deal's coming to an end in 4 months' time? Can you please have a look at them? Does anybody do that? Not many, is it? You're phoning them. So what therefore happens is you make an appointment, or somebody makes an appointment for you. Is this right? And you send out an email to that customer and say, listen, here's the details of our remortgage appointment. Not that you would call that, probably, but you would send out an email. Now, what we've done is produced a video, a 90-second little video that explains what we're going to do on the remortgage appointment, okay? And we're going to play that for you now. Have a look at this.
You're in safe hands. With your mortgage deal coming to an end, our job is to research not only your current lender, but to search over 12,000 mortgage products from over 90 lenders. We pride ourselves on finding you the right deal at the right price. We take into account your current circumstances and what your future needs might be. And it's not just about your mortgage. We will also check any of your mortgage-related insurance products. Our job is to make sure that they're up to date, good value for money, and still fit for purpose. It will be really helpful if you can find your insurance policies, so we can check they are working for you as well as they can. So, until our appointment, sit back, relax, and leave the hard work to us.
The language works, right? Because what we're saying to the customer is your mortgage deal is coming to an end. We're going to research the market. Lovely. And what we're also going to do is check any mortgage-related insurance policies to make sure that they're up to date, fit for purpose, good value for money. Now, we've got a 92% click-through rate on this video when we send this out, which is the highest we've ever had. Customers are watching it. They're not reading all the splurb. They watch these little videos. Now, this has helped advisors then at the start of the appointment to position it exactly like this video's just done. And they say there's 2 things we're going to do. We're going to look to make sure you've got the right deal on your on the mortgage product moving forward, because this deal's finishing, we need a new deal. But we're also going to make sure that any related mortgage insurances are also the right deal for you moving forward. We're going to make sure that they're still fit for purpose. We're going to make sure that they're still good value for money with the best chance of paying out. Is that okay? Now, how many customers do you think say no to that? Practically none of them do, because you've said up front. So now we've got buy-in from the customer and it's on the agenda, and I promise you, if you get it on your agenda and their agenda at the beginning, it suddenly starts working. So what we then did, I started interviewing lots of advisors who had got a REMO penetration rate of at least 60%. And I asked them one by one on video. I'm going to show you a very short clip of an advisor now who's running at about 70% on purchase and just over 60% on REMO penetration rate. So let's have a listen, see what he says.
I would always just, when I'm looking at remos, it's always just a case if there's going to be a need for it. We'll always discuss it. We'll look at realistically, has the situation changed? Have they had more kids? Are they looking at borrowing more money, obviously, which a lot of people do for home improvements and things? Has there been a change of job? So, yeah, I would like to say I would always address it and discuss with them. And in the same way, as Amanda's mentioned, we've got a similar process, but I will always try and do a relatively cookie-cutter process where I think if you use the screens, so if you use I love the percentages screen on Midas Pro, as well as Solution View. I think that does, if you do that correctly, that does half the job for you. So I would basically, because to be fair, if we've done a 2-year fix, let alone a 5-year, the client's not really going to remember looking at those screens. So I can basically say, look, we'd have done this before, but let's look at it completely freshly and look at your situation again. Because the only thing that won't have changed over those 2 years is going to be the mortgage, really. Everything else probably has changed. So, yeah, it's definitely something I would look at.
And do you find that with quite a few customers, circumstances have changed of their lives changed, jobs changed, family changes?
Yeah, definitely. I think especially over the last couple of years, obviously. But no, definitely, there's always something that's changed. So it's almost like you're just trying to uncover something that is you're in to sort of discuss it and relook at everything.
Interesting, isn't it? Now, here's the key points that Aggie says there, right? First of all, he says, I always discuss it. He's not cherry-picking. He's not predetermining the outcome, is he? He's treating them, he says, like he would a purchase case. He says, I'm using fresh eyes. This is the key. The problem is your brain remembers 2 years ago and they said no, or they said this is my limit, or this is all I'm going to do. And you just remember that. But he isn't remembering that. He's saying, I'm approaching it totally fresh. He's looking for changes of circumstances. He's looking for any changes with the mortgage. He's actually sharing a whole lot of stuff. I don't know if you guys are using Zoom, but or getting back to face-to-face. But please get off the phone, because phone is blindfold advice. Use the tech that we've now got to share information with customers. It makes an enormous difference. There's a temptation on Remo, and especially PTs, to just like bash the case out over the phone. Stop it. Genuinely stop it. Use the technology and share things with customers. That's when Aggie was saying I use the risk reality screen that we've built within MAB. Is sharing some really good stuff with customers, and it helps them visualize things. So there's some really good things that come out of that. Now, what we did on the back of talking to all these advisors, we've created like a Remo checklist. All right, I'm not going through this full checklist here, but I'm going to show you the top line detail. Now, what I'm covering off here is your objection that says, my customer's already protected. Do you remember that 20 of you said? The customer's already, it's already done. My mission is already sorted, I've got no more work to do with this customer. Okay, well, let's think about this. So there's 3 things. There's customers' circumstances have changed. The second one is that there's total gaps in product lines. And the third one is that some products have got better than the one you did last time. Are those 3 things fair? So what we then did, we went into our customer bank. And as you can imagine, there are a lot of customers sat there, right? So we can now run analysis on these 3 things. And here's what we found. We found, from a customer change point of view, that 22% of them had changed something to do with the original mortgage at the Remo stage. 22%. We also found that 39% had changed the original. So the original fact find had different information in key areas for those customers. So they might have got children, they might have changed job. In fact, even their salaries have changed. They might have gone up not very much, but the salary has changed from 2 years ago. Right? So when you factor all these things in, there's quite a lot of changes. And one of the biggest changes of all, of course, is, believe it or not, I don't know if you remember this, but do you remember COVID-19? Right? Well, when you last saw that customer, it was a minimum of 2 years ago, wasn't it? Nobody had heard of COVID-19 this time 2 years ago. So when you last saw the customer, nobody had lived through a pandemic. Do you honestly think that their attitude to risk and their whole idea about protection might have changed slightly in the last 2 years? I think so. Oh, yes, I think so. So the previous conversation you had might be a very different conversation now. Is that a fair point? I like that point. You might not like that point, but I like it. Now, what about missing products? So we look at missing product lines. We found that 79% of the REMOs that we're going back to look at have got no income protection. Now, we've made big inroads into income protection in the last 12 months. We're now running at 42%. So, fine. We've moved things up a gear, but not 2 years ago we weren't. So 2 years ago, we were protecting about 21%. So that means around about 80% of customers that we're going back to have got no income protection. So you're telling me that all your customers are protected, but I would bet your back book isn't going to be too dissimilar from our back book, would you think? And we also found there's hardly any FIB. There's practically no family income benefit. 96% of customers, no family income benefit. We also found that many customers have got some critical illness for the mortgage, but not full critical illness because it's super expensive. So they might only be protected for half of the mortgage amount. Very few for the full amount, we found. So again, you've got at least half of our customers where there's a chunk of critical illness that's missing. We also looked to see, well, wait a minute, products have also improved. Over the last 2 years, products have improved. L&G's CI Extra policy didn't exist, for goodness sake. And you sold L&G last time on their standard product. Now they've got CI Extra. How many more conditions are there on CI Extra? Somebody tell me. You know, of course. Or maybe you don't know. Interesting. But there's massive improvements. There's 39 additional conditions. So you look at it and think they've bought a policy, they've bought some critical illness, so let's move on. But actually, when we're reviewing and reprotecting, all of these things mean there are enormous opportunities that are out there. Now, does it mean every customer buys? No. Does it mean in Aggie's case that 64% of people buy? Yes. But why would he be getting 64%? And bearing in mind, this guy won our top award for protection on purchase sales in 2018, 2019, and 2020. So his purchase protection is exceptional. So it's not as if he's done a crap job up front, he's done a really good job up front. But he's still finding enormous opportunity out there at the REMO stage. A lot of it is just down to us. What we've seen is that businesses that set up REMO specialist teams within their business, because the advisor is approaching it new and it's not the original advisor, do twice as well as the original advisor. Why? Because they haven't got all the hang-ups of the original conversation. So look, here's the point. Review, review, review. And make sure on every REMO it's on the agenda. I produced that little video. You could produce one of those little videos to get it on the agenda probably in about an hour, right? You don't need Mortgage Advice Bureau to do that. So get it on the review on every REMO. And two things are going to happen. Either you might replace what you did 2 years ago or 4 years ago because it's not fit for purpose anymore. In a good chunk of cases, it is just no longer fit for purpose because the mortgage has changed or something like that. Or you're going to retain the existing business but alter it in some way. In other words, you might build on what they've already got. It's gone orange. I've run out of time. And all of these things, if you're doing this on every REMO, equals this. And I tell you what, the FCA are very interested in this. What are you doing in terms of retention and ongoing work with your customer? Because you've earned a bunch of cash up front and you're getting paid renewal over time. And what are you doing? Oh, I don't do anything. Until the mortgage deal comes up in 4 years, I'm doing a grand total of nothing. They don't like that. And so the next steps are, I would say this top one for me is critical. It was only when we started analysing the MI that we knew what was going on. And if in your business you can't tell me, bang, what is my purchase penetration, what is my remo penetration, and what is my buy-to-let penetration, you will move absolutely nowhere. Because believe it or not, you'll change nothing if you don't know what to change. Is that fair enough? So crunch your MI and get something running in your business that's doing that. Treat every remo as a purchase, position protection at the start in the way that I explained to you, and look for those three things: change of circumstances, gaps in product lines, and upgrading to better products. And if you don't do any of those things, then please, please, please get out a pen and get out a piece of paper and start writing on this piece of paper, I must reprotect. End of lesson.